Hi everyone, and welcome to Boothy Bites, and a big hello to you, Boothy. Where are you joining us from today?
Hello. Yes, I'm in the Isle of Man. So, for those who haven't got the geographical touch, it's a little island in the middle of, in between England, Scotland, Ireland, and Wales. A little island there, and there's a motorcycle race, and I'm here to see my mum and dad and my brother and family. So nice. So I'm in the Isle of Man. This is not sunburn, I promise you. It's windburn.
We were joking before we pressed record that I've got some sunlight streaming through because I'm filming this in the afternoon and Boothy's in the morning. And yeah, we were saying I've got sunlight and he's got zero of it being in the So anyway, talk us through the latest from the RBA and the impacts the tariffs are having on our economy.
Yeah, so let's get stuck in. So firstly, we called it. We got the rate cut, which is fantastic. So we're 2 down this year and 6 months into the year, which, where's the year gone? So, we have a 3.85% cash rate. So that's great. So I think, the 0.5% that we've seen as a reduction in interest rates has really, sort of helped as with some of the living pressures that we've had for many years now. So, yeah, it's good, and I think it hasn't stopped. So I think the sentiment right now is that the Reserve Bank potentially will go again in July. I think it's July the 8th, so it's not too far to wait for another quarter cut. And then I do feel that they'll sort of slow down as we get to that 3.5%. I think that will be time where they'll sort of think a little bit deeper about what the next steps and what the next sentiments are. Because, as we reduce the interest rate, it stimulates probably a part of the economy which is a little bit hotter, and we'll talk about property later. But what these interest rates are really doing is cushioning us from a few potential impacts of the global trade issues that we're seeing in the marketplace right now, although nothing has really properly played out, because it seems that on one hand we get this sort of knee-jerk reaction around tariffs, and this is what we're all going to have to pay above and beyond if we're exporting over to America. The next conversation or news item we're having is that it's going to give us 90 days. This is Donald Trump, by the way, and then he's too busy having lunches and dinners at Mar-a-Lago, I think it is. So anyway, it's confusing, but certainly the sentiment is that these challenging tariffs and agreements internationally will have have an impact domestically here with our exports for sure. So, and that will slow our economy down, and that means that the RBA will have I suppose a dovish or a reduction in interest rate thought process in the coming months as well. And I think, like I said before, potentially sort of 3.5% by the end of the year, with provisions potentially next year to go lower. But so that just gives us an extra 0.5% or 75 basis points in our home loans, which is great.
Not bad. Now, jumping over to the lenders, have they passed on this rate cut to their customers yet?
Yeah, so I think I was probably a little bit naughty. I said in my last blog that potentially that the big banks in particular would keep some of that money back and not reduce the rates by 25 basis points, and that's actually not the case. So in the main, the big banks have all passed on the 25 basis points. There are a few sort of smaller banks who haven't for various reasons, but in the main, most of the lenders have done that. However, what I've seen is that there are a couple of lenders which have only reduced sort of 15 basis points on particular products. So, the 25 basis points is on own home principal and interest repayments, whereas some of the maybe interest-only investor products, they've clawed back a bit of margin there. So again, I think this is a really good time to get a review done. Just make sure your lender, one, has passed on the rates properly, and two, to make sure you're not missing out on any better rates in the marketplace. And
staying on the lenders, what are some of the best deals you've seen recently?
Yeah, so it's interesting. It's all the non-banks, and just a reminder. So the main banks, the big banks like CBA, NAB, Westpac, ANZ, and Macquarie Bank, they typically offer discounts on application. So you have to sort of force your hand with those guys to get their best interest rates, which is not great, and that's why you'd use a broker as well. But some of the smaller banks, we've got a great variable product with Kudos for own home. That's P&I at 574. So 5.74%. That's got an offset as well. And then Teachers Mutual have got a really lovely principal and interest 3-year fixed rate at 5.1%. So there's a big discount actually in that fixed rate. Now, I would suggest that's worth thinking about potentially looking at some fixed at those low rates as well, because as interest rates decrease, will we get to that 5.1% there. So I think there's a little bit potentially of margin in the market for those right now. And then talking about investor interest rates, we've got MyState doing a 574 P&I variable as well, which is similar to the Kudos own home rate. We've got Great Southern doing an interest only variable at 5.79%. And then we've got Teachers Mutual again offering a 5.35% P&I investor fixed rate as well. So again, we're starting to see some competition in that fixed rate space. Those variable rates certainly have come down and potentially offer some good opportunities for cheaper rates, save some money, or potentially borrow again and do something with the the equity and the affordability that we're starting to see again. Interestingly now, so having this sort of 3 discounted interest rates, if we get one in July, that will probably allow a borrower to borrow an extra sort of $100,000 ballpark. So that's sort of the indication of the extra impact it has for the marketplace.
Yeah, not bad. I'll take it.
Yeah, I reckon. Yeah.
And so what's your take on the property market right now?
Yeah, so, in line with what I've just said there, where we've got quite a lot of pre-approvals in the system. So what that means is we've got lots of clients who've actually, have come to the bank, they've registered with the bank with their financial information and got a number around what their affordability is for lending. And obviously the reason they do that is because they're interested in looking at property. Over the last sort of 12, 18 months, because of the property market's been pretty difficult, people have not been in market. Also, potentially, they haven't been able to afford what they wanted to buy as well. So with these few interest rate decreases, the property market is heating up a bit again, especially for that sort of first home buyer. So that extra $100,000 we said before, which is a big impact to borrowers. If those guys and girls can actually borrow that extra, it gets them into probably a more appropriate property, or actually gets them into a property whereby that they just couldn't afford before. So yeah, so that's sort of heating up in that sort of lower end of the market. And second to that as well, from an investor perspective, that's the end of the market whereby that people are looking as well. So that sort of $1 million, $1.5 million is an affordable investment property these days as well. So again, the two combinations of first home buyers, investors, it's really hotting up that space. And from a property clock look, we've had some hot market up there in Brisbane where you are, and we've seen a lot of activity there. Perth has really benefited over the last sort of 12, 18 months as well from investor money in particular. Adelaide, we've seen people go to Adelaide to buy investment properties there as well. And interestingly, sort of that subdued market in Melbourne, which the state cost of owning an investment property over there, that has sort of pushed people away. People are now going, well, that cost is not a big an impact as the potential capital gain I can get there now. So that Melbourne market is certainly heating up, and we start to see a lot of clients jump down there, try and find investment properties down in Melbourne as well. So go the Victorians. And I like going to Melbourne too, so it's fun.
Let's finish up on Lydian HQ. I hear we have another new offering to help our clients.
Yeah, so my backstory, as a banker, I looked after financial planning firms, accounting firms and law firms in a professional services division at St George Bank years and years ago. And in fact, that's how I met Roxy, my business partner today. And, I've always had a passion about being able to help those businesses do the things that they need to do to grow and expand their businesses. And that might be, buying other businesses to merge into, purchasing their own premises, potentially helping key staff members to get equity in the business so they can retain good people. So there's, all of those elements are in that mix. And look, I'm not working as an active broker today, so it was a challenge for me to do both. But we've got a great guy called Steve Spanton, and he's joined us. In fact, he was from Westpac, so he actually took over many of my clients when I left like 15 years ago. So he's now with Lydian, and he's definitely got a great lens on this practice finance. So we've now got Lydian Practice Finance, and what we're looking to do there is support our financial planning firms who are partnering with Lydian in the main to that, if they need practice finance, that's cool. Also the principals of those businesses, if they need some personal debt, like their home debt or investment debt as well, we'll help those. But this will cascade out to accountants as well. And who else we've got on there? I think accountants, I know there's some good policies for medical people and things like that. But anyway, we're going to focus initially on the financial planning space. So welcome to Lydian Practice Finance and Stephen Spanton. Woo-hoo.
So exciting. Not to mention Stephen is such a legend, so it's exciting all round.
Definitely. No, it's nice to add it to the and we get another trucker cap, Jackie. So we get a quiver of trucker caps these days, so that's why we do it. It's not about business, it's about the trucker caps.
Absolutely. And on that note, that is everything. So, Boothy, thank you so much for joining me from the Isle of Man.
Beautiful. Well, look, I've got my green on. It matches the green here. Matches the green weather outside today. I think we've got a bit of rain. Yeah, so I'm going to go for fish and chips with my little nephew and my son, and then we're going to go watch some motorbikes around the TT course. So anyway, we'll see you later.
Very nice. Enjoy. Thanks, Boothy, and thanks everyone for watching.
Thanks, Jackie. Ciao.
Bye.